Okay, we can all agree that looked really painful, but it's not as painful as living a life with a bad credit score. So in today's video, we will be covering what a credit score is and what credit is. So, credit is money borrowed from the bank, but at the end of the month, you do have to pay that money back. You can either choose to pay at full price or the minimum amount, which sometimes can be $25. But just beware that if you do not pay the full amount, you will be charged the APR, which is the annual percentage rate. That is basically your interest rate for the remaining amount of money that you owe.
Credit score is just a number for banks and anyone that loans you money to see how trustworthy you are in a simple number. The higher that number is, the more trustworthy you are, thus the more money they're willing to give you. The lower that number is, the less likeliness of them to give you any money at all. There are many ways you can raise and help your credit score.
The very first thing most first-time owners, credit cards obviously, do is get a secure credit card. That is because that is backed up by cash deposits, which the cash that serves as collateral. The collateral meaning that if you were to miss a payment for that month, the bank then takes that deposit from you, and unfortunately you cannot get the deposit back.
Second tip is get a cosigner. A cosigner is someone with more credit worthiness than you, but in the rare case that you were to miss a payment, the bank then would collect money from the cosigner.
The third and final tip is avoid carryover. Carryover is avoided by paying the full amount that you owe at the end of that month. Once you carry over, it just adds interest to every bill that you have. That is when they apply the APR, and APR usually ranges from 14 to 28%.
I'm Knox Folsom, and I'm talking about the number of bureaus. So there are 3 bureaus, and one is the Equifax, and it comes up with a credit score based on the info they have. Then the lender makes a choice and decides on the interest rate. And then the Experian provides monthly data and payments, amounts and balances. And TransUnion, the smallest of the big 3, does the same thing but sells fraud protection directly to the consumer.
When is the best time to use your credit score? Is anytime you're making a big financial money move, like going to buy a car, going to buy a house, putting a loan in on an apartment, or going to the bank just for any amount of money you may need for anything. Your credit score is going to be required at the bank just to even get talked to for a loan. If you have a credit score that's 850, which is the highest it can possibly be, you'll get the most amount of money and the most likeliness of you getting that money for whatever you need. The lowest your credit score can be is 300. So if your number is around 320, they'll probably turn you away at the door. But bringing it back, the best time to use your credit score is anytime you need money, especially from a bank or when you're going to get a house, car, or apartment.